It's so nice to be able to just come out here and walk past all these very expensive buildings. This is the Flamingo here, and enjoy these amenities for free. You know, they have this bay walk here right by the water. It's absolutely gorgeous, not so hot today, and man, do we have a lot of stuff to talk about today. There's a guy named Ian Shepherdson, and he actually saw the last housing crash coming as soon as 2005, and he warned of a housing bubble brewing back then. And funny enough, this guy is now warning of the same thing happening again right now. And I know some people think I'm crazy, and everybody else is too, that's talking about the housing crash and different things like this here on YouTube. But a lot of those people who say that also probably think that there's some sort of ulterior motive here. Like, I don't have anything to gain from home prices going down other than the fact that I might be able to buy another investment property, which would be great. But other than that, you know, I'm going to lose value in my personal home, so that's not great, right? So there's pros and cons to everything, guys. And you know, that's one thing people don't understand, because what I'm trying to do here is just report on what's really happening. And what's really happening is we are seeing things just take a turn right now. And Ian Shepherdson is thinking exactly the same way. And Ian's number one reason for saying that we're going to have a housing crash: unaffordability, guys. That's what we've been talking about this whole past week now, about how unaffordable everything is, even with the interest rates coming down a full point. He's saying that any rebound we're going to see in sales right now is going to be very small. And the reason for that is because even though mortgage payments are down, the monthly payments are still up 54% higher than they were just 1 year ago. And that's still unaffordable. And Ian says that home prices need to fall at least another 15% in order for things to start getting back to normal. But I'm a little bit of in disagreement with that. I think home prices need to fall more than that. My prediction was 20 to 25% coming in the next year or two, within the next 24 months basically. It could happen more than that. I'm not saying it can't, but that's been my long-standing prediction for a while now. And I think things need to come down at least that much to get anywhere near affordability again. And unfortunately, that will still leave some markets in the realm of unaffordability that used to be affordable. But when they print $6 trillion, you know, and it all gets dispersed through the economy, and we talked about in the other video about how people are stealing all this PPP money. I mean, a lot of that money's never going to get recovered, guys. That's the honest truth. And it's already been spent on expensive real estate like we've been seeing all over the country. And you know, unless they're going to be repossessing those homes and selling them for pennies on the dollar to people that earn the money the hard way, but I just don't see that happening. But here's a couple of charts for you guys to look at that basically back up why we're going to have this housing crash because of unaffordability. When we look at monthly mortgage payments on existing median single-family homes, the unaffordability and the payments are basically at an all-time high. They were just a little bit higher back in the early fall of 2022, but it's still well over $2,400 for most people, which is a lot of money. When you look at this other chart that tracks unaffordability, we haven't been this low on the list since the mid-'80s. So you're talking about 40 years we haven't been in a situation where home prices have been as unaffordable as they are right now. And to me, that by itself could be solved by people just making more money, right? But the problem with it is that we're entering this global recession. It's not just the US. And as we enter this global recession, people are not going to have the money for these unaffordable homes, guys. And my case, time and time again, of why all this is going to turn around is because people cannot afford homes at these prices, and the path of least resistance to make these homes affordable is just the price coming down, because interest rates are probably going to remain elevated for quite some time. And if people want to sell a house and you want to get this place sold in the next 3-4 months, your only option is going to be to sell at the price someone can afford to pay. It's that simple. A couple other contributing factors that are going to play into this housing crash are the same things that I've been saying. Home inventory, which we're going to see a lot more of coming in the spring very soon, and it's already been ticking up. And the prediction is that home inventory is supposed to go up by about 17% this year across the nation. So that'll be a nice relief for buyers as well, not only as prices come down, but just giving you more choices as well, which is something people that bought in the last couple of years didn't even have the luxury of that. So that's a great thing. Another factor to this is all the new construction that's being built and still coming on the market and is going to continue to hit the market throughout this next year. And as we get this flood of new construction homes that we're already seeing them slash prices on tremendously, that's going to bring down the rest of the market with it, guys, because the developers have so much power when it comes to swinging home prices with all of this, because they're building thousands and thousands of units in the same markets, in the same areas. And when they lower prices on all of those at the same time, it affects all the existing inventory as well. So when you combine the recession, more inventory, unaffordability, higher interest rates, unemployment likely to go up throughout the rest of the year, a hurting stock market, hurting retirement accounts, all of this points towards things coming down. None of it points to things going up. The only argument that the housing bulls and the economy bulls have right now is that supply is still low and unemployment's still low. So everything's going to be fine. Don't worry about it. But all of that is changing, guys. It's changing right now. Like I said in the previous video as well, having this jobs report come in better than expected is actually bad news. It's bad news because the Fed is going to have to continue to raise rates higher and longer than previously expected, which is going to plunge us into a much bigger recession than most people think. So get ready for that. That's what I've been saying here for the past year on the channel. You know, it's all turning around. This is the year, guys. This is the year when everything starts getting cheaper again in terms of home prices, and more people start losing jobs. Things just are on shakier ground in general. And the more prepared you are for that, the better off you're all going to be. And it's not just me saying home prices are going to come down by 20% or more. Even the economists over at KPMG agree with my analysis. They're saying that home prices could fall as much as 20% just in 2023. And when I did my prediction video last fall, I said, I think in a year from now, which was last fall, coming to fall of 2023, that I think we're going to see home prices median across the board come down by 20%. And I think that's a pretty reasonable prediction right now, given the state of affairs. And if you don't think inventory is going up, check out this chart. This just goes to show you how much new construction is coming on the market, as well as how much existing inventory is coming on the market, and we haven't even gotten into the spring selling season yet. And another thing I think we're really going to see changing this year that's going to affect all of us and the whole economy in general, specifically the housing market, is just how many layoffs we're going to continue to see into 2023. In fact, there's a bunch of people at Meta, the Facebook company, talking about how they're expecting another round of layoffs coming. They already had a huge round of layoffs last fall, and now they're already talking about doing more. And a bunch of the workers there are starting to get paranoid about this because they're not able to get straight answers from management asking if this is over yet. You know, can I count on my job? They don't have an answer for people. Because just in November alone, Meta laid off 13% of its workforce, which is massive on its own, and now already talking about taking further losses to keep the company afloat is probably pretty frightening for the people that still work there. And now they're doing things like performance reviews, trying to figure out who's worth keeping and who's not. And basically, the narrative within the company has basically moved beyond whether layoffs will happen again, but more or less how many more people are going to be cut this time. So it's only kind of a matter of, you know, when and how many people are worried about right now, which is a reasonable worry to have given the state of affairs right now. And a lot of it depends on the company's performance in the first quarter of 2023, which we're already almost halfway through. And here's the crazy thing. A managing director with Pearl Meyer, who consults many tech companies on hiring and compensation, says that companies may even still conduct layoffs if business improves because of how unpredictable the economy is right now. What have we been talking about, guys? We've been talking about exactly that. How unpredictable the economy is right now, and just being ready for whatever comes next. And it's almost like just being a prepper, right? You know, the guys that, you know, have 2 years worth of food in a bunker and everything, you can do that. You can do that. And you can also be prepared financially. You can be prepared with all sorts of different things to just weather this downturn better than the average person right now. And that's kind of what I've been promoting here on the channel, because that's just what I do personally. I'd rather be ready for things to suck and then it doesn't suck so bad because I was ready than be completely blindsided by all of this and, you know, have no money and go broke at the worst time ever. And this guy from Pearl Meyer says that more layoffs coming, will likely be more incremental, probably laying off maybe 5% of the people that still work there at a time, and see where things go from there and kind of reassess it every single quarter. But man, imagine being worried every day if you're going to come into work and get the axe right now at a time when life costs more than it ever has, and especially if you're one of those people making six figures, living paycheck to paycheck, you're in big trouble right now. So that's why I'd rather just be prepared for the worst and hope for the best, guys. I feel like I learned that at a very young age when I was a Boy Scout. You know, it sounded kind of funny at the time. It's like, well, it doesn't seem very relevant when you're only 8 years old or whatever. But now as an adult, I can easily see why this is the more preferred path to go in life, because it just makes life easier and less stressful. Now, just like I've said 100 times before, I don't think 2023 is going to be the best year ever to buy a house, but it's probably going to be better than it was in 2022, no doubt about that. And for all of you out there who are going to be buying a house in 2023, I wanted to just share some tips for you guys on where you're likely to see a lot more inventory coming later this year, because I saw this report talking about the top 10 markets where you're going to see more homes for sale in 2023, and more homes for sale means more choices, it means more bargaining power, and it means being able to land the home at a lower price. So if you're someone who is going to be looking this year, maybe you want to look in one of these 10 markets in order to try and find the best possible deals. We're talking places like Salt Lake City, Dallas, Texas, Denver, Colorado, Charlotte, North Carolina, Memphis, Tennessee, Las Vegas, Nevada, Charleston, South Carolina, Colorado Springs, Colorado, St. Louis, Missouri, talking about you, Jeff, New Orleans, Louisiana. And some of these places are still quite affordable, guys, like where Jeff lives in St. Louis. Median home price, $230,000. New Orleans, $270,000. Charleston, South Carolina, not the most affordable, but still well under the $400K mark like we see in a lot of areas now. They're at $362,000. Las Vegas, guys, you're going to be able to get the deals of the lifetime over there within the next 24 months, because there is so much home building going on in this area and no one's buying these houses. You're going to have pickings galore over there. So if you're a home buyer in Las Vegas, you definitely want to be, you know, waiting this out a little bit longer, just seeing where things go, and you know, try and get the best deal possible. You know, pulling the trigger right now makes 0 sense when in 8-9 months from now you're gonna be able to get that same house for, you know, probably 15% less than what it costs right now. Memphis, Tennessee, guys, median home price there is $255,000. Charlotte, North Carolina, median home price $350,000. And I know for some people that might sound expensive, but it really isn't when you compare it to other places on this list, like Denver, Colorado. Median home price there is $550,000. I had no idea that buying a house in Denver is basically just as expensive as here in Miami. It's insane, guys. But there's going to be more inventory this year, so it doesn't necessarily mean the median home price is going to drop from $550,000 to $350,000, but it means you're going to have more choices and you're going to be able to get better deals. And it's the same thing with Salt Lake City. That's another highly overpriced market right now. Median home price $460,000, but hey, the inventory is projected to rise by 178% there. So these are all places to be looking in if you want to have the most amount of choices and the most amount of leverage as a home buyer this year. Now, you know how I just said you don't want to be buying in Las Vegas right now? You want to be waiting this out? Well, here's the perfect example story of why I just said that and what backs this up, okay? There was this story out of Canada today about people who paid top dollar for new construction homes there at the peak of the market, and now the home builders have been slashing prices on the very same homes that these people have bought to other new buyers dramatically. And these people are pissed off to the moon right now. This is all happening in Oakville, which is probably somewhere near Toronto, I believe. Right off the bat, these people are saying that nobody had any idea that home values would fall so low or that interest rates would rise so fast. Gee, wonder why they didn't know that. Maybe because they're not watching channels like this, right? That's probably why they didn't know that, right? Otherwise, they probably would have known that for a while. That's my guess. But anyhow, the home builder is called Matamy Homes. I don't know how to say that, guys. It's Mattamy. Matamy Homes is selling the same kind of pre-construction houses in the communities for as much as hundreds of thousands of dollars less than what these people originally signed their contracts at. But I can't feel too bad for these people because these homes are already extremely expensive, right? And this one buyer actually put down deposits on 2 homes, right? And they put down about $800,000 in deposits for these new homes. And it's to the point now where this guy who put almost 800 grand on the table to buy these houses is now looking at walking away from that 800 grand just to not have to buy these houses, because what's happening is the appraisals aren't coming in anywhere near what they were supposed to get people into these houses right now. And some of these people who are supposed to be buying are leveraged to the hilt, because what's happening is some of them need to sell their existing home in order to buy these homes, and they can't do that anymore because now home prices have gone down so much in this area that they're not going to be able to sell their current home for anywhere near what they thought they were going to be able to, and simultaneously they're locked into this contract to buy these extremely expensive homes at peak market prices. So this is basically the worst situation to be in right now. I could see people who are buying in Las Vegas end up in this same situation within the next 6 to 12 months. So you got to be very careful looking at new construction properties over there right now, or any property for that matter. Now, in a normal sales contract, when you're getting financing for a property, there's usually a financing contingency, and if you cannot get the financing for the property because it doesn't appraise or whatever reason you just can't get the financing, then usually that's an out for you guys to get out of the contract. But it appears that that's not the case for these people in Toronto that are locked into these new construction projects, because the way they're all talking about this is they either need to follow through with the deal at the price that was agreed, or they need to walk away and lose their deposits. So it's going to be interesting to see what's going to happen with these people. Here's the funny thing about this, guys. They're saying, oh, there should be consumer protections for pre-construction home buyers under these circumstances. And then they say things like, oh, we had no idea, you know, the prices were going to go down this far, or that interest rates were going to go up this high. We had no clue. So we shouldn't be responsible for this. Well, why should the home builder be responsible for it, guys? It's not like they can predict the future either. It's not like it's the home builder's fault that all this has happened. Now, the home builder is definitely responsible for grossly overcharging people for their houses and taking advantage of pandemic times when we had housing supply crunches and the supply chain shortages and everything, making it very difficult to buy a new home. So they're definitely responsible for that. But it's just crazy because, you know, no one wants to take responsibility for this stuff. Everyone always wants to point the finger at somebody else. Like, how about taking some responsibility yourself? How about recognizing, oh yeah, I put down all this money at the top of the market. Probably wasn't such a good idea. Maybe I should have thought a little bit harder about what I was doing at the time. That nobody comes out and says that, you know? One of these disgruntled buyers thinks that home buyers should be allowed to back out of pre-construction sales without penalty and their deposits refunded if the builder drops home prices below a reasonable percentage, such as 5% or 10%, or if interest rates increase above a reasonable value. So they basically want the whole contract to work in their favor, and if things don't go their way, then they want to be able to get out and get their money back while the home builder's left holding the bag, you know? So that doesn't really seem fair if you ask me, and I'm not trying to be biased on one side or the other. I'm just saying that doesn't sound fair, guys. And one of these guys that needs to sell their house, they pegged the value of their house between 1.8 and 1.9 million a year ago, and now the home's worth about $400,000 less in just 1 year. So talk about a price cut, that is massive. And the one that he's trying to buy in this new development costs about $2.3 million, and now they're selling the same houses, same design and everything, for $1.8 million, guys. You're talking $500,000 off what they were previously. That is staggering. So to me, it sounds like a bunch of these pre-construction home buyers in Canada and a lot of new Tesla owners have the same buyer's remorse in common right now, where people paid huge premiums for these products that are supposed to be worth all this money, and it turns out we're starting to see every day closer and closer to what the real value of all these things are, which is far lower than what people basically thought they were. To me, guys, this goes back to the same lesson I've been kind of preaching in the whole video, is just be ready for these things. Be smart with your money. Don't be stupid right now. You know, if you're gonna make a purchase, make a wise one, you know? Buy a house that is more in line with what prices should really be at right now. You know, anybody who signed up to buy one of these pre-construction homes at these insane numbers, they knew they were getting themselves into a ridiculous deal, but they did it because they felt like they're never gonna be able to get another house again, just like everybody else who bought. So keep these things in mind. Protect yourself, protect your wallet, protect your family into 2023, and just make good decisions. You know, that's it. Make good decisions. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. If you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.